The U.S. economy is grappling with a surge in inflation, reaching a concerning 3% in January 2025. This marks the sixth consecutive month that inflation has exceeded the Federal Reserve's target of 2%, raising alarms about the economy's stability. The persistent upward trend in prices poses a significant challenge for consumers and policymakers alike. The current inflationary environment is fueled by a combination of factors, including supply chain disruptions, strong consumer demand, and rising energy prices. These pressures have been further exacerbated by geopolitical uncertainties and trade tensions, creating a complex web of challenges for the U.S. economy. The last time inflation reached these levels, it triggered a wave of economic uncertainty and hardship for many Americans. As prices continue to rise, there is growing concern about the potential impact on consumer spending, business investment, and overall economic growth. Consumers are feeling the pinch of rising inflation most acutely in their wallets. Grocery prices, a key indicator of everyday expenses, increased by 0.5% in January alone. The avian flu outbreak has severely impacted egg production, leading to a staggering 15.2% surge in egg prices last month, and a whopping 53% increase year over year. Gasoline prices, another major expense for many households, rose by 1.8% in January. The national average for a gallon of regular gasoline is now at its highest point in months, adding to the financial strain on commuters and families. The cost of housing continues to climb as well. Rent prices have been on an upward trajectory for months, putting pressure on renters and exacerbating the affordability crisis in many parts of the country. The combination of rising grocery, gasoline, and housing costs is squeezing household budgets and creating anxieties about the future. The Federal Reserve, tasked with maintaining price stability, faces a difficult balancing act. The central bank has signaled its intention to keep interest rates restrictive for now, delaying any plans for rate cuts in the near future. The Fed's cautious approach reflects the delicate economic landscape. While raising interest rates can help curb inflation, it also carries the risk of slowing down economic growth and potentially tipping the economy into a recession. Adding to the Fed's challenges is the uncertainty surrounding President Trump's trade policies. The administration's imposition of tariffs on various goods, including steel and aluminum, has already contributed to price increases in some sectors. The potential for further tariffs and ongoing trade disputes adds another layer of complexity to the economic outlook. Businesses are also grappling with the implications of rising inflation and trade uncertainties. The National Association of Manufacturers has expressed concerns that the tariffs could lead to higher costs for businesses and consumers, potentially dampening investment and hiring. Sarah House, a senior economist at Wells Fargo, has voiced concerns about the lack of progress in containing inflation. "We're not seeing the kind of improvement we need to see," she noted, highlighting the persistent upward pressure on prices. Anthony Saglambine, global market strategist at Ameriprise, echoed these concerns, emphasizing the negative impact of tariff uncertainty on business confidence. "Businesses thrive on certainty, and the current trade environment is anything but certain," he stated. The combination of rising inflation, the Fed's delicate balancing act, and the uncertainties surrounding trade policies has cast a cloud over the economic outlook. Businesses and consumers alike are bracing for continued volatility and adjusting their expectations for the future. The coming months will be crucial in determining the trajectory of the U.S. economy and whether policymakers can successfully navigate these complex challenges.